This is Pat Walker, Mission Winners, doing 5 stocks you might want to watch this week. Applovin. What's the deal with this stock? Well, group ranks B+, group rank 58, composite ratings 99. Last quarter's earnings up 333%. Last quarter sales up 36%. And again, composite rating of 99 and relative strength of 99. I like that. Great earnings estimates going forward for this year. They're looking for a 373% increase in earnings over last year. Something else really nice about this. You see the volume that came into this, into the close? Let me clear that out. See the volume that came into this, into the close? Pushing through these tops. What could be a potential buy on this? Take out the tops of this bar right there. What would that be? The high on this bar is 74.59. Potential entry on APP. You don't need to add a dime to it. 74.60 will work. 74.60 on APP. All right, let's move on to the next one. Got it right here. IESC. You can see this is bouncing here a little bit. What would be a potential entry on this? Well, let's take a look here real quick. I've got this loaded on 2 different platforms for the work that I do. IESC, let's get the fundamental data on this. Earnings per share ranks 97, composite ratings 98, relative strengths 98, leading the stock right near new high ground. Timeliness is A. Last quarter's earnings up 128%. Revenues up 10%. Relative strength, as I said, is 98, leading to new high ground. It needs to take out these tops across here, okay? And it needs to do it with really good volume. What's the high on this? And by the way, good volume on this bar, volume pickup on this bar. It's more aggressive though. And you can say, why do I say that? It's not a clean and simple base. They have earnings in 9 days, so we have time. I would like a flatter base. I just pointing that out. Again, I'm not being negative, but at Mission Winners, we try to coach and educate what to look for. This is not a clean and simple flat base. Therefore, it's a little bit riskier. All right. Just pointing things out. So what would be our entry? Well, it needs to, again, take out the top of that bar right there at 133.40 on IESC. 133.40. Let's continue onwards. Simtech, SMTC. I like the base going forward here. What would we want to do with this one? We're going to look at this real quick. And again, I'm big. For those that don't know, I was an IB Media co-leader for 12 years. I'm firmly ingrained in looking for companies with great numbers. Now, what's going on with this? It has an earnings per share rank of 7. Okay, that's not so good. Has a composite rating of 87. Has a relative strength of 97, leading the stock into new high ground. Here's the thing that's intriguing. They're looking for a 108% increase in earnings this year over last year. Their fiscal year ends in January, so they're reporting here, okay, within the year. Okay, that's for this year. But here's where it gets great. Next year, they're looking for a 420% increase in earnings over this year. 400% increase in earnings. That's power. I mean, that's real power. And I want to show you something else. Here's the weekly. Watch that. You see the tops across here? And I'll draw this for you. At Mission Winners, we do the analysis. There you go. Good volume came into it on this bar, right? So what do we want to do? Go back to the daily. Let me fine tune it. The high on this bar is 35.80. The high on this bar is 35.93. It's easy. 35, let me get rid of that one clean bar. Right there. Take that out with volume. What would be our entry? $36 on SMTC. 36. And I'll say this, and I'll say it several times on this video. In a good market with good volume. There we go. Let's do another one. Micron Technology. Picking up here a little bit. Some volume coming into it. What's special about it? Well, let me tell you right here. It has an earnings per share rank of 34. It has a composite rating of 81. Earnings aren't due until June. One thing that's interesting here, though, okay, has a B accumulation distribution. They are looking for a 100% increase in earnings, 108% increase in earnings this year over next year. They're looking for a 1,800%. This is consensus earnings estimates. 1,800% increase in earnings. But is there a really clean entry here? Not that clean. And there's another reason why. There's some distribution. See, emission winners, we don't just give ideas, we educate on what to look for, all right, in the charts and fundamentally to help make better investing decisions. BCO, you can see this little shelf right here. What do we want to do with this? Well, I'll tell you. Brinks, earnings per share rank 97, composite rating 97, timeliness is A, okay, accumulation distribution A minus, relative strength 86. You can see the small shelf right here, downward sloping trend line. What could be a potential entry? Take out the top of this bar right here on BCO. What's the high on this bar? The high on this bar is 89.72. It's easy. Take that out, 89. And again, the high on this bar is 89.72. It's easy at 89.80. That's it. One of the things in Mission Winners you'll see is we strive for simplicity. We look, this is not super clean, but we love clean and simple flat bases. And there's a reason why. If it's clean and simple, it increases the potential that other people will see it and buy also. Isn't that what we want? We want patterns that everybody can see. It increases the potential, as I stated, that they'll buy also. And we like that, okay? Now here's BZ. Going across these tops, you can say, what's the lowdown on this one, Pat? Here we go. Earnings per share rank 80, composite rating 99, accumulation distribution A, SMR rating A, group rank A minus. Look at the volume that's coming into it right here. I like that. And again, accumulation distribution is A. Relative strengths 89, leading into new high ground, okay? Last quarter's earnings up 941%. I like that. Last quarter sales up 42%. Here's a great lesson for all of you. If you want to dramatically increase your or improve your investing results, and this is quantifiable, I'm not making this up, all right? Focus on, this is research from O'Neill and Company, all right? Earnings. Focus on stocks that last quarter's earnings were up 30% or higher, or last quarter's sales were up 30% or higher, minimum. You will dramatically improve your investing results, all right? I'm just telling you, okay? Oh, is there always an outlier? Sure. Oh, there's always the oddball one. But why not stick the, folks, here we go. Stack the deck in your favor. You've got two people fishing, and every 5 minutes, one person catches a fish, and the other one every 30 minutes. Where are you going to go fishing? You're going to the hole where there's more people catching the fish, and where there's more fish being caught. It's that simple. At Mission Winners, that's what we do. We stack the deck in our favor. And I'm going to say it again. Focus on leading stocks and leading groups that last quarter's earnings up 30% or higher, or doesn't need to be both. It's great if it's both, or last quarter sales up 30% or higher. Accumulation distribution of A or B, and composite rating 90 or higher, and no low price stocks.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.